Good morning, traders. It's Friday, February the 8th. Taking a look at the charts, we've got the SP500 index here. We've got the 30-minute chart on the left, green bars. We've dipped into a couple oversold territories as of yesterday. We started to see some panic selling on the market on the NYSE. We got into a short-term pivot low and we're oversold more or less with this. We do have some more downside potential. We are oversold, doesn't mean it's the bottom, but overall we are looking for some type of move to the upside going forward. We do have an upward bias for today for the short-term intraday trend. We are set to gap lower by about 0.5%. We could very much so see this be an exhaustion gap at the bottom. We see it get bought back up. We are coming down to, we're pulling back, but there's still support down here at the 20 days. So we still have room for it to potentially continue to consolidate and come down and test these levels. But more or less, we're getting down into these short-term oversold levels in the market where short-term momentum gets a little bit overdone. We are getting down here to both the short-term and momentum type of cycles down here, and we could start to see another run higher. The big question is, can the market hold? It is moving down into a support level. This will be a support zone through here, also the 20-day moving average. And obviously we're seeing fear in the market. Yesterday the VIX is up, today the VIX is up. We had panic selling on the NYSE. So all those things are pointing to more or less the market is getting shaken up. People are getting out of their plays, and that's usually when we start to see a bottom get formed. Now, if we take a look at a couple of our plays here, the Roku play had a really nice pop earlier in the week. It's faded back down. Yesterday, it sold down pretty good, down about 6.5% at one point. More or less settling into these upper wicks and near this resistant previous pivot high. Ended up recovering fairly well on the day. Likely, if the stocks are down today, we're going to see some more selling in the market, but overall, it's still holding up in a very bullish formation. And volume was, considering the move yesterday, volume was relatively light in the market. Overall, we're anticipating this continue to pop and to really start to extend and move higher. Looking at NIO, yesterday, again, pop and a pullback. Obviously, when the equities markets are down, these stocks, these are high beta stocks, meaning when the stock market moves up a percent or so, these high beta stocks can move multiple times that. And the same what happens when we get some selling. We see it move down multiple percentage of what the SP500 moves down. So overall, we do want to see these support levels more or less hold, which would be more bullish. They are leading stocks, so they should outperform and hold up above recent pivot lows. And if we take a look at the weekly chart, this is a weekly chart setup. Let's just look at the weekly chart. You can see where we are here. Very strong upward momentum in the market. This chart really doesn't give a whole lot of insight on this platform, but more or less we're poking up. We've broken this high. We've broken this previous high. This is an IPO, new electric car company, and it is very close to, this is a very big basing formation. We're starting to see huge accumulation, and all it has to do is really break above here, close above here, and we should start to see investors move to the upside. There's lots of good potential for an explosive move, potentially up into this 12 range, up in this upper wick where there was lots of volume traded. So it is building a base. We just need the equities market to hold up in general for this to break out, and we should start to see investors pile in and for the shares to rally. Let's take a look over at the chart of bonds this morning. Bonds moving up. Obviously, yesterday, some fear in the market, so bonds had a nice pop as a safe haven. Today, they're moving up again. If we just zoom out a little bit, you can see we've had this nice strong run. It's kind of flagging sideways here. I do anticipate it to flag sideways some more. I think it's going to continue to consolidate, maybe go up, test these highs, but overall, I do feel as though it's going to trade in the upper end of this range through here until we see the equities markets roll over. Potentially in a couple months, we could see this start a breakout, and bonds have had a big move down over the last couple of years, and once we get back into some fearful markets, we could see bonds work themselves back up. There's quite a bit of upside potential there. Looking over at, let's take a quick look at the US dollar index. US dollar this morning is trading relatively flat. Ended up closing fairly strong yesterday. Let's just zoom in a bit here. Obviously a move up there yesterday, trying to break out above these previous highs, and that put a little bit of pressure on precious metals and commodities. And if this can follow through and break out, we're going back up into this 25.90, 26 area, potentially much higher, and that will put a deeper correction in the price of precious metals. If we look at the short-term chart here, more or less we've gone from red bars and a short-term technical downtrend. Last week we've gone to orange bars indicating an uptrend. Usually when they flip to orange, we can see a continuation move, and we could see the dollar really continue to muscle up here and put pressure on precious metals. Looking over at gold, gold and silver are up this morning. The dollar is trading slightly lower. We're seeing a pop here. They have had a little consolidation. Again, we've talked about this. We could very much so see precious metals come up and chop around in this big range. They could very easily pull back in a more substantial manner as well. Overall, we've had a very nice run up here. We got out our GDXJ on the day that it put in the high, and we're letting the market going to chop around and consolidate, either build a sideways launch pad for a big breakout above this blue resistance level, or we're going to look for a pullback and look to get long there. But overall, it's had a nice run. Now it needs to do something like this, where it's going to probably increase volatility, could trade sideways, and then could even pull back before it goes higher. Looking over at GDXJ, just to get a quick look, you can see yesterday really kind of unwinding, starting to move down. Today, obviously, metals are up a bit, so we're going to see the GDXJ pop. We'll see what kind of price action happens here. If it is a little bit of a pop and gets sold back into, I do feel as though we are into this type of market condition right here. So I think we could see this continued pullback going forward, and we could see GDXJ pull back down to the 31, potentially even come back down somewhere into this 29.30 area. So I do think there's some potential for still the downside there. Looking at energies, crude oil up 0.5% today. It's flirting with these key resistance areas, trying to put in a bottom. Yesterday, pretty weak day for it, and looks like short-term bias. It's stuck under the key moving averages, the 20 period, the 5 period, and more or less it's had a drop down, consolidated, drop down, consolidating today. Maybe we're going to see this continue to unwind. We do have first target down around the 50 and potentially an unwind all the way down to around 46, 48 zone down in this area. Last but not least, natural gas up 1 1/3% this morning. Let's just look at the weekly chart here of this setup. This is, if you look at this chart, you can see each time it has come down to this area, we've seen a very strong bounce out of these zones. And here we are falling back into it once again. This is pretty much a signature technical trade where price rallies up and then goes free falls into price. We've seen it free fall into this price level several times, and this is a multi-week chart, or sorry, a week chart. So we're looking at a 2-month rally, 3-month rally, 1-month rally, 3-month rally. So this is where we are. Obviously, the ETFs for natural gas, we don't want to hold them too long if the price isn't moving fast. So hopefully we get a nice explosive move out of this zone, not so much a slow one like this, because the ETFs lose value over time if natural gas doesn't move fast enough. So something like this may not give us much return. If we get some explosive move like this, we can have huge returns very quickly. Get in and get out with these 3 times ETFs. Anyways, that's it for now. Talk to you in a bit. Bye-bye.